Alright guys, we just completed case 2 of week 3, or case 3, or chapter 3 I should say. Case 3, chapter 3, case 2, and we're going to start case 3. So the first thing we're going to do, we're on page 54, is it says your company sells and services cell phones. They are located in California. The company does collect sales tax since all of its customers are consumers. They begin business in 2019 and want you to use QuickBooks Online starting January 1st, 2020. Beginning balance as of 12/31 is below. You are to make the following changes to the file you created in Chapter 1 based on what you've learned in the text and the sample company. So by this point, you've already did the test drive. You've done case 1, case 2, and case 3. Now, case 3 is a little bit different in that case 3, you're going to be adding sales tax, and you haven't done that before, and that's the biggest difference between case 1 and 2 and case 3. So something to keep in mind is when we go back to case 1, we're going to need to turn off sales tax. We go to case 3, we've got to turn it back on. Go to back to case 1 and 2, turn it off. Back to case 3, turn it on. So the first thing we're going to do is we're going to go to our account settings. And it wants to modify the company name for case 3. So it's going to be case 03 and student's name. Alright, and we're going to save that. Add social security number. This is the first time it wants us to do that. So I'm going to click right here. Social security number is 987654321 as your business social security number, as I am the sole proprietor. It wants me to put in the dashes. Look at that, 987-65-4321. Save. Alright. C says sales. Make sure that track inventory is on. We know that that's been turned on because it was turned on before. Expenses, turn on track expenses by item by customer. Turn on make expenses and items billable. Both of those were done. Set default bill payment terms to due upon receipt. Now notice this is something different. So payment expenses right here. The default bill terms is not net 30 anymore. They are due upon receipt. So I'm going to click here. I'm going to add a new, and then due by a certain day of the month, due next time of issued within, and due fixed number of days. So we're going to do fixed number of days. We're going to change it to due upon receipt. The fixed number of days is 0 days, and we're going to save. All right, and payments, no. Advanced tracking, turn on, those are all done. So step 2 says follow the steps provided in Appendix 1 to add 10% sales tax titled California, which is payable to the agency titled State Board of Equalization. So right here, charge sales tax. That needs to be checked if we're going to be doing this. And right now it's not checked. So if you click right here in the little question mark, it says turns on the tax checkbox by default for billable expenses and items. Requires sales tax to be turned on first. If we go to more, it's going to tell us enter billable expenses. That's not what we want. We want to talk about sales tax. So Appendix 1. Let's go to Appendix 1. I want to make sure that I'm telling you guys to do this right. Appendix One Sales Tax. Click Sales Tax from the navigation bar. Use Set Up Tax Rate button to view the window shown in Figure A1. So we're going to have to charge sales tax, so this is going to need to be checked. And I'm anxious to see if it tells me to set it up after I do that. And it has not. So it says to click on Sales Tax from the navigation bar. Well, if I go to the navigation bar, it no longer says sales tax, but maybe I can click on taxes. Let's set up to collect and track sales tax. Set up sales tax. Here we go. Is this your address? We'll use the physical address of your business to find your sales tax rate. If the address lookup is good here, tell us. If not, click on the pencil to correct it. So this is not what we wanted to do. So we're going to click on the pencil, and we're going to change this to the town in California. And that was, let me go back and see what the city and state was. La Jolla, California. And the zip code for La Jolla, California is probably something that I need to look up. So let me look it up. And it looks like it is looks like it doesn't want to give me a zip code. I'm going to find one anyway because we're going to Google it. Open a new tab. And type in zip code for La Jolla. Is that La Jolla? Is that how you pronounce that? La Jolla? So it is 92037. 92037. So make sure you write that down. I'm going to try to use the same street address as, you know, as this, but I have the city and state. Let's confirm it. La Jolla, California. Great, we confirmed your address. Now click next to the address we set up. Do you need to collect sales tax outside of California? No. How often do you have to file tax returns for the agency? Let's just put yearly. When did you start collecting sales tax for this agency? Aha. This might be a really good one for us not to have to keep turning it on and off. We're going to say we didn't start collecting sales tax until 12/31 of 2019. Why did I do that? 12/31 of 2019. Man, it will not give me any benefit of the doubt. December 31st, 2019. So this means it should not start charging taxes until case 3, which begins 12/31/2019. Click next, and we're calculating your sales tax. Sales tax is set up. Got it. All right. So let's hope and assume that the sales tax was set up correctly. The sales tax is really a small portion of learning QuickBooks. And like, you're not going to lose major points if it's not set up right or if it's set up with the wrong date. I mean, it's something that you need to know how to do, but at the same time, it's kind of retarded to set it up in case 3 and turn it off on case 1 and 2, and then turn it back on in case 3 and turn it off in case 1 and 2. I think it just needs to be consistent. I mean, I get that they want to show you how to do it, but sometimes things just don't make sense. Alright, so we've done that. Create a new account and related beginning balances. So we're on number 3 right now for case 3. And that is creating new accounts related to beginning balances, category type, detail type, name, stuff like that. So if you notice here, they're getting less and less information to do the same amount of stuff with once you get to case 3. Case 1 gave you steps on how to do it. Case 2 told you exactly what needed to be done. And case 3 says, here's some information. You need to find out where to go and how to do it to get it taken care of. So we're going to be working case 3 with limited information. Each week, case 3 will have limited information. So it wants you to set up a new banking account, new checking account. So we're going to go to Accounting, Chart of Accounts, set up a new one. We're going to go to New. It wants a bank account. It's telling your detail type is checking. It doesn't say the detail type is checking. That's what it wants you to understand that you know. And then the name. Now I can't call this just checking because I already have one that's just checking. That's what was case 1. So I'm going to call this case 3. And the description, I'm just going to call it case 3 so I know. And the balance is going to be $12,000 as of, this is the most important date, 12/31/19. So as of 12/31/19, I have $12,000 balance in my checking account. I've named my checking account checking case 3, and I can save and close. The next is a fixed asset, machinery and equipment, original cost $15,000. Note, when entering the new fixed cost asset, place a check mark in. It tells me how to do the depreciation again, and the depreciation is $2,000. So I'm going to go to New, and I'm going to go to Fixed Asset, and this fixed asset is going to be machinery and equipment. So I'm going to scroll down to machinery and equipment. It can't be just machinery and equipment because I have plain machinery and equipment in case 2. So I'm going to call this case 3, right? I'm going to add that to it. My description is going to be case 3. I'm going to track depreciation of this asset, so I'm going to click this. My original cost is going to be $15,000 is what it says, as of 12/31/19. And my depreciation is C down there at $2,000. As of the same date, 12/31/2019. I'm going to hit save and close. My next one is D, long-term liabilities. New. It's going to be a long-term liability, and it's going to be a notes payable. And I have notes payable for 1, 2, so I got to create this one for 3. Case 3. Description is case 3. My unpaid balance is $23,000 as of, and it doesn't tell you this anymore, it tells you just at the top, 12/31/19, $23,000. Save and close. Equity, owner's equity of 0. So new account is going to be equity. The detail type is owner's equity. This is the first time we've used owner's equity, so I shouldn't have to do anything to it. The description, I'm still going to put case 3. I'm debating whether I want to put it up here in the name as well. I don't think owner's equity itself comes up anywhere else. I can't think of anywhere else it comes up instead of case 3. So I'm going to leave it like that. The balance is $0 as of 12/31/19. Alright, so the only difference here is there's a 0 balance. I didn't name this case 3 even though I put it in the description because I haven't had one before. All the other equities have been something different, and I should be able to hit save and close. Alright, so step 3 is done. Step 4 says create 2 new products. Name the description. Initial quantity is as of December 31st, 2019. Inventory asset, price, cost, income account, and expense account. So it's telling us all this information. It's an iPhone 7 and a Pixel. These are the 2 items. So we're going to go to new. Oh, excuse me. We're going to go to sales, products and services, and then new. I'm going to go to inventory item. The first name is iPhone 7. Tells you how long this was written. Alright, so it's just iPhone 7. Apple iPhone 7. Let me take that back. Apple iPhone 7. I have 10 of them on hand. This is as of 12/31/19. And what's that stupid 4-digit date for the year? There we go, 12/31/2019. Inventory asset, sales price is going to be $750. My cost is $500. And my income account is going to be sales. Cost of goods sold is going to be my expense account. One last thing we need to do is we need to make sure we type in the sales tax category. And it is going to be it's taxable. It doesn't tell us what to put it as now, does it? Inventory asset, new product. It is taxable. Well, it didn't tell us what to put here for the sales tax category, so I'm not putting one. And we should be good to go. We got the cost, we have the price, we have the income account, we have the expense account, we have that it is taxable, we have the date and the quantity. We should be good to go. Save and close. The second one is the pixel. So we have a new inventoried item. It is the pixel. Initial quantity on hand is 3 as of 12/31/2019. It is selling for $650. And it cost us $400 to purchase. The income account is sales. Cost of goods sold is the expense account. It is taxable. And we should be good to go. Pixel. Save and close. Number 5 says create 2 new service items. So for the service items, we're going to go to new, service. The first one is Apple repairs. Apple repairs. And it's $45 and it's not taxable. $45. I take off this check mark that says taxable. And it is going to go to services. Service, not sales as your income account. So the income account is service. So Apple repairs, $45, service, non-taxable. Save and close. New, service item, pixel repairs, P-I-X-E-L or E-P-A-I-R-S, pixel repairs. This is cheaper at $40. And it is services, and it is not taxable. Save and close. Alright. Number 6 says, add new account receivable and accounts payable accounts, then make changes to the following accounts via Journal Entry 1 as of 12/31/19 with an offset to opening balance equity. So this says add new accounts receivable and accounts payable accounts. This is the first time that I've read add new accounts payable and receivable, and let me check case 2. Yep, in case 2 it says make changes to the following accounts via journal entry. So we're going to make accounts receivable case 3, and we're going to make accounts payable case 3. Blows my mind. Alright, so to do this, we're going to go to your journal. So we're going to go to New, Journal Entry. The date's the very first thing that we change, and it's the most important. This is as of 12/31/19. And the first account is going to be Accounts Receivable. This says Add a New Accounts Receivable. So I'm going to have to click on the drop-down menu, Add New Account, and it's going to be Accounts Receivable. Detail type is Accounts Receivable. The name is going to stay the same, except I'm going to change it to Case 3. Description, I'm going to change to Case 3. I'm going to save and close. So we have Accounts Receivable. Now, here's the thing. To make sure you got Accounts Receivable 3, you're going to have to scroll all the way over to the right to make sure that you read it as Accounts Receivable 3. You can make your column wider to do it as well. So in my debit, Accounts Receivable is a asset, so I'm going to debit it, $41.25. And the name is going to be a new customer, GHO Marketing. So drop down, add new. Customer's already selected. It is going to be GHO Marketing. I can save that. My next is going to be Prepaid Expenses. It does not say to create a new Prepaid Expenses. So I'm going to use the same one I have here. Prepaid expense, and it automatically tries to put that money in there, that credit, and that's not the case. We back it out, we take it off. We go to debits, and it tells us to put $27.50 in here. There's nothing for the name. So the next is Accounts Payable. Now it wants a new Accounts Payable, so I'm going to go to the drop down menu, Add New. Account type is Accounts Payable. And I'm going to just change it by adding the name, Case 3, description, Case 3, and save and close. So now I have Case 3, and it tries to balance out again. I take that off, and I go to my, it's going to be actually a credit because Accounts Payable is a liability. Liabilities are increased with credits. So if I'm increasing this number, I'm going to put it in as a credit, and it's $5,000. And my name down here at the bottom is a new vendor, Apple Inc. So add new, Apple Inc. And it is a vendor. And save. Alright, so now I'm going to do my pull down menus, and I see that I should have all these things added here. 3 vendors, 3 customers, because I've done 3 cases now. And I'm not balanced, so it tells me I need to use an offset for opening balance of equity. So my opening balance of equity, since this debits is higher than the credits, the next one is going to be opening balance of equity. And it's going to put $1,875 as a credit to balance these out. So here's where the benefit is. I didn't have to do the math in my head because the computer automatically tries to balance it out each time you add a new line item. So that would be it for Journal 7. I'm going to save in new. Alright, so the next thing I need to do is number 7, close the opening balance equity account, which should have a balance of $10,075 to owner's equity via journal entry 2 as of 12/31/19. We know it's not going to be journal entry 2 because we've been doing journal entries for each of these cases. It tells us it should be $10,075. Now to check it, we're going to exit out of the journal, go into My Accountant, or technically Reports, sorry. Scroll down to your trial balance. We're going to type in the date, 12/31/19, or 20, excuse me. Run report. And we have a balance, an opening balance of equity of $10,075, which is exactly what I said it should be. So then we know we need to write off that much. So if we go back to our journal to do a new journal entry for the date 12/31/19, because we are doing case 3, we're going to debit owner's equity, or excuse me, opening balance of owner's equity. And it says close it to owner's equity. It does not say close it to retained earnings. The amount that we're going to do is $10,075, and our credit is going to be to owner's equity. Owner's equity is the account that we created at the beginning of case 3. We're going to do that for $10,075. We have the date right, we have these two accounts right, we have the debits and credits right, so we can save. Once that's saved, we should be able to go into our trial balance as of 12/31/2020, and we see now our owner's equity has a balance of $10,075, which is exactly what it shows on figure 3-17. Now 3-17 has a lot smaller balance, but that's because our trial balance acts as a trial balance and shows us the balance as of a certain date. That certain date is December 31st, 2020. So we have the checking accounts for each 3 cases. You can see them here, checking, case 2 and case 3. We have accounts receivable for case 1 and 2, and for case 3 is separate because it told us to do it separately. Inventory, asset, furniture, fixtures, machinery and equipment. I mean, some of these notes payable, 1, 2, and 3. Common stock, just 1 and 2. Owner's equity, that's just case 3. My point is that knowing where this money is coming from is just as important as it being listed on here. So when you create these accounts, you need to make sure that you can identify them. Like I said, when we go to do our grading, and we look at what you have your balance in your checking account, we're going to add all 3 of these up to make sure that that balance is right. That way, if you only made 1 checking account instead of 3, well, it's all there. Because as we go on in other chapters, chapter 4, chapter 5, chapter 6, you're going to be making payments and you're going to be doing all kinds of things, and it's going to be confusing whether you should be using which checking account and which savings account, which depository account. So all the money kind of gets mixed in. That's one of the bad things about using this QuickBooks account for 3 different companies, because technically we're trying to create 3 different companies. Each case is a company into QuickBooks. So this is what you would have for your trial balance. Now I'm going to export as PDF, like always, save as PDF so that I can submit it for grading. I'm going to print a copy for myself. Once that's done, I'm going to go to my reports again, and I'm going to go back to my transaction detail by account. This is where the dates really matter. It's not month to date, it's custom, and it's going to be 12/31/19 through 12/30/2020. Run report. So this should literally be all the transactions that we did in case 3. Now, granted, all the transactions in case 3 was setting up the account, so they were all done 12/31/2019. That is the first day of this case, and it goes to 12/30/2020. So going forward, all the transactions that we do will be in 2020. But so this is what you're going to want to submit for grading, because this we can grade. I mean, it's based on, you know, one year, so this is always going to be case 3. Now, granted, once we do case 3 of chapter 4, you're going to have this plus the case 4 plus Chapter 4, Case 3, plus Chapter 5, Case 3. But it's going to be a whole lot easier than looking at all 3 businesses for all the years. A lot easier. We're going to go to the PDF, export PDF. We're exporting that. We're going to upload it to Canvas as our answer, and I'm going to print so that I have that for my file. All right, so that is Case 3. Number 9 of Case 3, 10, 11, 12, 13, 14 literally tell you if your trial balance is off. Make sure all your changes were dated 12/31/2019. Which is one of the most important things to do. It gives you advice on how to find errors if you have one. So definitely take a look at it if you don't have these totals that we have here. And when it talks about exporting your trial balance and exporting your transaction detail by account, just know that the way that I told you to submit them as far as the dates go is how you're going to want to do it, because that's how it's going to be graded. All right, so this concludes Case 3 of Chapter 3. Email me if you guys have any questions.